The Canadian economy shrank in April. Let's get more from Carl Gomez, Chief Economist and Head of Market Analytics Canada at CoStar Group. Carl, thank you very much indeed for joining us.
Good morning. Thanks for having me.
What seemed important in this GDP report? I know it was only a marginal miss versus expectations, but our economy shrinking.
Yeah, it was a slight decline, 0.1% for the month. Interestingly enough, when you kind of look at the composure of the industries that contributed to that decline, it was very much concentrated on tariff-related industries. So we did see a pretty good decline in manufacturing across the board in the manufacturing sector. A hit to wholesale trade, also a hit to transportation and warehousing. So those are the culprits, and that just tells us that the economy is starting to feel the effects on a rear view mirror sort of approach, because this is backwards looking for April, but is starting to feel those effects on an industrial output standpoint with those tariffs.
I presume it'll take a while, though, before we get out of that period of distortion where companies were ordering goods to try to get ahead of tariffs.
Well, yeah, I think we're starting to see a little bit more of the impact of getting outside of that stockpiling issue. One thing that was also holding up the GDP numbers a little bit here was also the election. So the public sector contributed to a positive gain. If you take that out, you are seeing that those good sector industries are taking a bit of a hit. And so I think the stockpiling is now starting to move out of that phase and more into a direct reduction in output and activity in those sectors. What'll be interesting, and we won't see this until we see the expenditure accounts, is to see that swing in inventories. It was a very strong contributor for that stockpiling in Q1, but I think in Q2 that will actually start to contribute to negative growth overall in the second quarter. It's our base case scenario that we think the Canadian economy did enter into a recession as of Q2. And so these monthly indicators, and this is just the beginning of the quarter in April, is starting to show that impact.
So you think Q2, we went into a recession. Obviously, the Q2 begins with April. And do you think Q3 will also see contraction of the economy?
Yeah, I mean, it is our base case scenario. Again, a technical definition of a recession is two consecutive quarters of negative growth. We do see negative growth in Q2, Q3, possibly Q4. We're trying to get a gauge on the effective rate of the tariffs that are imposed on Canada. And of course, we started to see an increase in some of those tariff rates, aluminum and steel production up to 50%. But basically, our math is showing that if the tariff rate across the board, even for the non-compliant sort of USMCA industries that are affected, would probably see, roughly about a 10% absolute tariff rate on Canada. And that results in a pretty substantial hit to GDP over a period of time. So that's why we're kind of banking in Q2, Q3, possibly Q4, some negative growth. And a lot of that has to do with the output side of the economy. But I think on the expenditure side, we're going to start to see some slippage as well, related to business investment, consumer spending, related to all that uncertainty that has been building up since the first quarter.
Do you think the Bank of Canada is done cutting rates?
I don't believe they are done cutting rates. I think there's a couple more cuts on the table. That being said, I'm not 100% convinced that they will cut this July. They are still waiting on evidence. I think they're still battling the inflation numbers because the core rates are still sitting relatively high to their target rates. They want to see more indication of the economy kind of showing holes from this tariff war. And I think at that rate, probably September, December, we might see a quarter point cut here or there. That being said, this is a very different rate cycle. We've been kind of adamant about this view. The Bank of Canada has said it as well. There's not much monetary policy can do when it comes to a trade war. So different than other emergencies like COVID or the GFC, we don't expect the Bank of Canada to cut, close down to zero. I think they will relatively, hold at around 2.25% once they're finished, all said and done. And that has a different sort of outcome because they're going to probably be leaning on fiscal policy and, some other structural adjustments that are necessary in the Canadian economy to keep it, going.
Just before we go, just talk to what does economic theory say about defense spending? Obviously, it boosts GDP, but you could argue the money would be better spent on schools or hospitals. What does economic theory say about that?
Well, I think, you do get a bit of a multiplier effect. Obviously, that happens when you ramp up defense spending. You get it directly through the GDP accounts of government spending. And then you get some multiplier impacts, but those multiplier impacts, excuse me, are, they vary. Some of the multiplier impacts you don't get, definitively in a GDP accounting way, but you do get it in terms of your commitments to your foreign allies to spend. And I think, obviously the Canadian government has not been honoring its commitment, kind of free riding a little bit on the United States. So we have to step up a little bit. And so I think, while we're not going to see big economic multipliers back on the economy, I think from a non-economic standpoint, it's an important standpoint that Canada starts to ramp that up. So it's good that we are actually starting to honor our commitments that way.